Okay. I mean, truly an amazing bull market. In the middle of that bull market, 1975, over 9 months, the gold price declined by half. By half. A whole bunch of people that had been committed gold bugs because of the move from $35 to 200 became very uncommitted when the price fell from 200 to 100. By getting shaken out by that volatility, they missed a market that moved from 100 to 850 in 5 years. The lesson is, if you are unnerved by the volatility that you just saw, do something else. There will be more volatility. There'll be lots of volatility, and it will get worse or better, depending on your point of view.
Rick Rule says retail silver is tight, but wholesale supply is still available. Recent price gaps caused metal to move rapidly between London and the US, creating temporary shortages. He stresses that volatility is normal in precious metals. BRICS are using gold more as a top-tier asset, while silver is too volatile. South Asians prefer gold and silver due to distrust in governments and often buy through informal markets. Thanks for watching. Subscribe to Fine Metal for more updates.
Well, let's start with the headline. I do see it as a short-term correction, and I think there will be more short-term corrections. I've been in these markets for 50 years, and in American parlance, gold and silver markets are rodeos. If you can't take turbulence, if you can't take volatility, get off the bull, right? Early in my career, Fasin, the first bull market I was involved in was 1970 to 1980, actually 1981, 10 or 11-year market. The gold price cleared from $35 to $850. The silver price was more extreme, from $1.20 to $50. If you have the psychological and financial stability to use volatility as a tool, rather than to be shaken out by it, volatility is good. What it means is that there's a series of sales. It's very interesting to me. I was on an interview a couple days ago, and somebody was talking about the decline in gold, and I had to say, which decline are you referring to? In 2 years, the gold price goes from $2,000 to 4,200 or something, and then it declines to 4,000. So you tell me, did gold fall by $200 an ounce, or did it increase by $2,000 an ounce? And whether or not you are able to participate in the gold market for the next 10 years depends very much on your answer to that question. I think that's interesting. My own experience in South Asia, which clearly don't compete with yours, is that the level of social trust in South Asia and the taxation on gold and silver transactions and ownership in India means that most of the Indians that I know have transacted in gold and silver in Dubai as opposed to in India. And it's common knowledge that if you look at the amount of in-system silver available for good delivery, not just in London, but also in New York and Chicago, that the futures markets often trade 200 times the amount of inventory available for good delivery per day. Now, the vast majorities of these things cash settle. What we saw 4 or 5 weeks ago, 3 weeks ago, for people who were lucky enough to have early expiring contracts, is that people who took good delivery in Chicago could put it on a plane, send that silver to London, and make 4% overnight, which is, it's pretty attractive. And that did, let's just say it caused some ripples. And that requires some explaining. In terms of retail denominated silver, at least the United States and Canada, the dealers are pretty much empty. 1 ounce, 100 gram, that stuff is in really short supply. And those dealers who have access to it are charging often a substantial premium to spot. In wholesale quantities, there is still silver available. checked with my former employer, Sprott, where I'm no longer an employee, but I'm still, I believe, the largest shareholder, about their access to silver to support inflows into the Sprott Physical Silver Trust. And they said at present, there is adequate supply of wholesale silver. The silver leasing rates, you'll recall, 3 weeks ago went crazy, as much as 40% per annum. That was because there was a 4% differential between the spot price of silver in London and the spot price of silver in New York, Chicago, or Toronto. And rather than leasing silver to American dealers or jewelers or whatever, the holders of physical silver were simply putting it on a plane and flying it from Chicago to London and making an overnight 3 or 4%. That circumstance has begun to ameliorate, and it could be exacerbated quickly if there was a renewed flow of investor interest into silver. But I want to stress that, at least from the information I've been able to gather, that the bullion banks in North America are able to access reasonable quantities of large denomination, large weight, good delivery silver. Sprott certainly hasn't had any difficulty. If the silver market stays in the balance that exists today, not the balance that existed 4 weeks ago, but the balance that exists today, it's likely that much of the non-good delivery silver in the world will be tested, if necessary, re-refined, and entered into the system, which is to say good delivery silver. If silver demand is exacerbated, if the demand levels, institutional demand levels, rise to the extent that they were 4 weeks ago, it may be that the stresses in the futures market will overwhelm good delivery availability in the North American silver market, not anywhere near the ripples that existed in the London market, which was basically empty. People were afraid in the U.S. that Trump, in his wisdom, would put tariffs on gold and silver. And there were a lot of folks who decided that if they preferred to hold gold in the United States rather than Europe, that the time to do it was then. And there were, in fact, massive flows of precious metals from Europe to the U.S., to the extent that, and it was fairly unexpected, the Europeans, for a time, or at least in London, ran out of good delivery gold and silver. And the ability of the Swiss refiners to take non-good delivery silver and refine it with a hallmark to introduce it into the system, it's just that the circumstance happened so quickly that the ability to transfer non-good delivery material to good delivery material was overwhelmed by near-term demand. If we assume for a second, and I'm not going to ask you to assume it, but if you assumed for a minute that demand for physical silver maintained at the levels that exist today, as opposed to the levels that existed 4 weeks ago, likely there is enough inventory in North America to allow the European markets to function until more supplies of non-system silver are introduced into the system. It's a time lag. There's a lot of silver out there, but it's not good delivery silver. It's not in system. And it needs to be introduced to this. Utilization of gold by central banks as a medium of exchange means that gold status as a tier 1 asset for both public and private transactions in banking is secured. I think that gold's role will grow. I think that the probability of more transactions among BRICS countries outside the US dollar necessitates gold being a tier 1 asset. The Chinese, as an example, wouldn't want to have $100 billion worth of rubles They might accept payment in rubles, but I think they would like, for at least as long as Russia has gold, to change those rubles for gold at the earliest possible convenience. I understand them wanting to keep the mechanism of the transaction out of the US dollar to avoid involving the US government. The Russians have indicated an interest in having the Russian central bank diversify their metals holdings to include silver. And I think one challenge for that will be the cash short nature of the Russian economy and the fact that at present, silver doesn't have tier one status. And silver currently probably exposes people to too much volatility to be useful as a 90-day medium of exchange. 90-day medium of exchange, meaning to the extent that there was a transaction, as an example, between India and China that settled in rupiah, the Chinese would need first to receive the rupiah and then to sell that rupiah and buy metals. And it would be difficult in a really volatile commodity, not that gold hasn't been volatile the last 12 months, to understand at the beginning of a transaction how much gold you would end up at the end of that transaction. So it seems to me unlikely that silver will ascend to tier one status. In terms of private mechanisms for silver, there is a very, very, very well-developed leasing market in silver now, where various entities make available silver-backed credit facilities to jewelers, among others. And there are formal credit structures in the United States in very large scale. JP Morgan, as an example, would be highly likely to extend credit against a large amount of silver, probably a $10 million minimum. What doesn't exist in the U.S. Until right now with Battle Bank is the ability for normal, living, breathing human beings to access credits secured by silver. That will be available in the market through Battle Bank as early as this coming January. Initially in collateralized amounts over $100,000, but as the market and the technology evolves, Battle Bank's hope would be to develop credit products for investors with collateral as small as $10,000. I think that'll go a long way in the United States and Canada to allowing credit products in silver to mature, since they're much more, I would suggest, sophisticated than Western people are. The only real experience I have with Indian participation in formal gold and silver markets is in Dubai. Anyone who goes to the gold souk, in Dubai, will notice not very many Arab faces and not very many Caucasian faces, but they will notice every second week when the paychecks come out for the Indian diaspora, a sea of thousands and thousands and thousands of Indians, Bangladeshis, and Pakistanis, and some Sri Lankans, turning their reals into gold and silver. I think I think an awful lot of the gold and silver ownership that I know about in India and Pakistan and Bangladesh is informal, which is to say, this isn't cash or savings part of the formal system. I remember 15 years ago holding a very small session with some young Indian technology-based expats in Sunnyvale, California, asking them how they came to me. And they said, interest in gold and silver. And I said, well, where does this come from? And they said, well, it's cultural. One of these young women said to me, you have very recent experience with the excesses of government, but Indians have experienced this for 1,000 years. The consequence of that is that the institutions around formalized gold and silver ownership and collateral in the Indian subcontinent are fairly new because of the very low level of social trust and the very low level of trust that South Asian people have for their governments. And I haven't seen a similar level of trust in India around commercial exchanges between Indians or between Indians and their bank, or certainly between Indians that would prefer not to be taxpayers and their government. You have more experience than I. I remember being told by some Gujarati friends and clients of mine that they really wanted to do business with me, but it would be impossible for me to navigate India. And that perhaps it would be preferable if the business that we did was structured in Dubai. So I'll leave to you the evolution of metals markets in India, given the low level of social trust evidence there.